Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Welcome back to the show, guys. I am your host, Brett McCollum, and I'm here today with Mark Monroe. And today we're going to be talking about best practices within creative finance. Before we do, guys, at Investor Fuel, we help real estate investors, service providers, and real estate entrepreneurs to 2 to 5x their businesses to allow them to build the businesses they've always wanted and allow them to build the lives they've always dreamed of. Without further ado, Mark, how are you, man?
I'm doing wonderful. Thanks for so much for having me on. And, we're chatting there a few minutes before we got
Yeah.
on and, really enjoyed it. So thank you so much for having me on. I really appreciate it.
Now, Mark, this is going to be it was really good catching back up. I know we met probably, I don't know, a few years ago, just catching back up, over the, it's been a while. So it's been good catching up. And guys, I have to tell you, I kind of say this a lot, Mark, like, this is going to be a great show. Guys, this is going to be a great show. Mark is a expert in the field of creative finance, and we're going to talk all about that. But before we do, give us a little history, give us some background. Who's Mark Monroe? How'd you get into real estate? That sort of thing.
So believe it or not, this spring, I'm going to be in this for 30 years. I started back in 1995 at the age of 25. Believe it or
Wow.
not, it's just amazing. I can't believe how fast time has gone. I can't believe how much the industry changed throughout the years and the different trends, like, where we were 5 years ago, 3 years ago compared to where we're at now. It's a cycle.
Sure.
And, yeah, like I mentioned before, I grew up in Vermont. I came from nothing, we're talking about that poverty. And
Mm-hmm.
then I did my first deal, believe it or not, at 19. And because I did the Carlton Sheets book, and
Okay.
I went and put bandit signs up on the telephone pole. We buy houses, and I got in trouble by municipality. I didn't know. I was 19 years old, so I had to go take it down. And when I went to take them down, this guy called me up, and he had a mobile home for sale, and I'm like, I wasn't interested. And I kept throwing it away. I kept saying I wasn't interested. He came back, and I ended up buying that thing for $3,000. It was worth 21. And what I did is I went and placed an ad in the class. When I negotiated with him, I went and placed an ad in the newspaper: mobile home for sale, owner financing for $25,000 with $3,000 down. Took that 3,000, gave it to the seller, ended up creating a note like at 7.5% or 8% over 7 years. It was $300 a month. It was my car payment insurance. That was my first deal at 19. But then I got
19.
sucked into the corporate world for about 5 years, 6 years. And so, yeah, that's a little bit about me. And now I'm down here in South Florida. Had a real estate banking firm in Washington, D.C. Around 1995. Ended up blowing that up to 107 loan officers at that
Wow.
time. So, but yeah, thanks so much. I appreciate it.
Man, that's super cool. 19 though, man. Like, I have to ask you this though, because I know me at 19, and I promise you, I was not thinking about real estate or anything like that. Or I know it was Carlton Sheets. Was it a late night infomercial that got you? Like, how do you at 19 yeah, I'm gonna just get how did that happen?
Because how I grew up with nothing, and I knew I had to do something to change my life
Yeah.
to be able to have the success. And I just saw different people were the owner that I actually worked for. Believe it or not, I ended up in McDonald's Corporation, and I was there for 10 years.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
And I started at 15 and I excelled, and I was in charge of several stores, and that's why I was transferring down to DC to be in charge of like 80 stores. But the owner owned real estate, and I saw like that's where he made a lot of his money also. And
I love that.
I saw that, and that's where I saw, okay, maybe this could be my path forward to be able to be financial freedom. And that's kind of where I really started into that path. But then I got sucked into the corporate world and enjoyed that and kind of thrived in that environment for a little while.
Yeah. So we were talking kind of pre-show a little bit. I think there's a lot of investors, a lot of people, entrepreneurs, and even that grew up in some varying forms of poverty. And I think when I look back on it, the beauty of hindsight, you can look back and see things, like it didn't happen to you, it happened for you, and that's true. I believe that. But what's interesting is I think what I heard you say is you found somebody and you saw something that was possible when you looked at inwardly like this, we don't have this here. And where I came from, I didn't really have a lot of that to look up to or see anybody, but I was good at sports. And so it's funny. It's like you see the poverty mindset, put their efforts in. If you really are trying to get out, you put your effort into something that you think you can make it at. Thank God for you that you saw somebody that had said real estate. I had baseball, and I did. And I played through college. I played a little bit post-college, did that sort of thing. But I've talked to all the people I interview and talk to that come from that background. It's an interesting thing, that like, yeah, I saw that this was possible, and nobody told me I couldn't do it.
It's true. I mean, the way I look at it is I looked up to people that I saw that they were successful at something, and I made them my mentor, but they didn't realize they were my mentor. So
Yeah.
I'd always learn as much as I could from that individual. And then I took that and went on to the next one. I mean, I can't tell you how many mentors I've had over the years going through. Even today, I'm always looking at people that know something a little bit more knowledge than I do.
True.
And I just stuck. I'm like that sponge. I want to be in a room and just absorb as much information as possible.
Yeah, we have to be, man. Like, like you never want to be the smartest guy in any room you're ever in, right? Because at that point, what's the point? It's like, it's kind of silly.
You said something a little before, and and I just want to put that out there because some people might be listening. You know, when you're in that situation of poverty and you're always trying to figure out how to kind of get out of the situation where you're at, or you think you can't because you're stuck in it, and then you start hanging around the wrong people. The key to it really is just start surrounding yourself with different people that's
Yeah.
going to lift you, and don't be in an environment where it's just going to be toxic and pull you down and, committing crimes or whatever you want to. Just surround yourself with people that are successful, learn from them. But the beauty of today's, you have the internet, and I didn't have that back then, so it
Yeah.
was a lot more challenging. But now you can just jump on social media and just kind of grow and learn from others.
That's exactly it. Yeah, I mean, so typically and statistically speaking, Mark, you and I shouldn't be talking to each other, right? Like we should be the ones that are like, yep, us too, we're in pop. But what I had to, and it took, I mean, it's years. I mean, it's maturity and growth and things like that you have to go through. And I'm sure you had to go through some of those things of your own. But when for the longest time, I operated out of a place of negativity, meaning I'm not going to be poor, so I'm going to do this. And that operating mode is fueled by negativity. I don't want to be this, and it's powerful. But what's more
Yes.
powerful is I want to operate from a lens of I get to do and pursue this vision and pursue this thing right here, so that I can be this for myself, my future, my family's future. I get to do. way more powerful than the other. But it took, I'll be honest with you, I mean, I'm 38.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
It took, I mean, I probably was 31, 32 when it clicked. Because for that, from the time I'm 18 till then, it's always been the pursuit of, I'm not going to be like that. And that was a hard shift.
It is. And I was about that same age where what you're saying, I went through, and it's a mental shift in your mind. And I did the same thing what you talked about. I was right around that same age. I went to therapy for 3 years.
Yeah.
You got to start working on your mind, because I was drawn to toxic women. So that was one of the things, because I was drawn, because that's how I grew up. So I did the book, The Secret. That was originally that started it. And you become what you think. And then I started, The Secret was the beginning where I cut out about 85% of my friends and family, cut everybody out, and was alone for about 6 months, refining. The only person I couldn't cut out was my mother, but I understood it. And then I was kind of going through the therapy. But, the thing about therapy with the mindset is, I went for a month and I'm like, this is ridiculous. I'm just wasting anything. Nothing's happening. And then somebody said, that went through it, said, think of it this way. Somebody that's like 500 pounds and they want to lose 100 pounds and they go in 30 days. Do you think they're going to lose 100 pounds? So it's really the same concept. So then I went back and I stuck with it. And then approximately about 6 months, it just clicked. Then I could see things. I understood my mind. I understood where my issues were, if you will. We all have issues. Everybody's got issues.
Yeah, we all do.
Recognize them and how you deal with them, and that's what really makes you grow.
Incredible. Yeah. So move it forward into the real estate conversation here, because I know we could do that for a long time, and it's powerful in its own right. But you start, you get, again, was it 95? You said it was. We kind of led into some of the creative finance things. So have you always been kind of operating from that like you did it in your first deal at 19 even, right? Has that just been kind of something you've been evolving your whole career? Or was it something you've started focusing on later? When did that kick in?
Yeah, I mean, we all have to kind of go through the normal path of, fix and flip and being the landlord and holding. We all go through it, and a lot of us fail at it because we don't know what we don't know. So what really kind of shifted is when I got back into it in 1995 and I got into real estate banking, where I ended up having a lot of my clients were investors, and I started becoming friends with them. I started looking at how they're doing things in their mindset. So then I started doing my first deals around 95, 96 was what I call a sandwich lease option. I don't know if you're familiar with that.
Oh, yeah.
But during a time period, it was kind of like how it is now. Things were sitting on the market and homes weren't moving. They were sitting there for about 4 to 6 months. So I was going to sellers. I'm saying to the sellers, because my background was real estate banking at the time at LO. I was going to the sellers like, hey, would you be willing to sell your home to me on a rent to own? I'll rent it for a few years, take care of the property maintenance and repairs, and then we'll close on it. Well, the problem was most of those people needed to sell that home to go buy the other property.
Right.
So what I did was I said, okay, I'll refinance your property, like at 80% loan to value. At the time, the ARMs were very popular. So I would do I think it was a 5-1 or 5-2 ARM at the time. So the rates were roughly where they're at now, 7.5. And I would get a rate for around like 5.25, 5.5, and be fixed for 2 years. So I'd refinance it. And then, oh, by the way, Mr. Seller, your new home, I want to do that loan. And then I would put a tenant buyer in the property, and they would put down what's called an option fee that's non-refundable. So off of one lead, I was making roughly about $35,000 on the front end and then creating cash flow. So that was how I originally did besides that other one at 19, that's how I started doing that. I did that for a couple of years, and then I segued into doing like a subject twos and then agreement for deeds. So all these different creative seller financing strategies, I took probably a couple of years on each one of those, going through the process of the education.
Yeah, and I bet you learned a lot of what to, but also what not to do during those. Yeah. And that's kind of where I wanted to spend a lot of time talking about today, because I've known you to be like,
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
I've known you to be the sub 2 and creative finance guy long before it was almost made popularized, in recent years. Can you kind of, I guess it's the main one that everybody talks about. Everybody, it's the subject to stuff, sub 2, right? And we know that it works. Let's start from that position. We know that it can be done legally and properly. But I want to talk more about compliance, legal, to make sure that, you're, as the real estate investor, you're doing it properly, that both you're protecting the seller avatar, you're protecting yourself in the future. Just kind of walk me through I know, start with basics and maybe let's build on it just a little bit. And because I really want it to be, because I think the same best practices are going to be true for whether you're doing sub 2 wraps, all the other kind of stuff too. There are going to be a lot of similarities. So talk me through that a little bit.
So, well, the number one thing is not necessarily compliance, is doing what's right.
Mm-hmm.
That's the number one thing. Right by the seller, right by the buyer. It doesn't matter. And always be upfront, honest, and be truthful about what you're doing. That's the number one thing.
Yeah.
You just want to just educate people, talk to them about it, give them the options, and explain the process of what can be done. And subject to, it's a great strategy, but it's designed for investors that have been in the business for quite some time. It's an advanced strategy. I didn't do my first subject to until I was probably maybe 4 or 5 years in the real estate investing world.
Yeah.
I learned some of the other ones because there's a lot of moving parts, and if you don't do it correctly, you can really hurt the seller and buyer. But mainly a lot of it falls back on the seller. And years ago, back around in 2003 and 5, people actually, what they're doing is, and a lot of times they didn't have a lot of, nowadays there's a lot of consumer protection regulations to protect the homestead buyer that you put in that property. Back then it was kind of like the Wild West. And it's
Right.
kind of a little bit like that now, the Wild West, but the regulators have been sitting on the sideline, but now they're starting to come back in because they're getting a lot of complaints from sellers that their end buyers defaulting. And it was never designed for assignments, wholesaling, if you will. It was always designed for us investors to buy the property, stay in the middle, and control it. So if there's anything that's going bad with it, we would be the one stepping up to the plate and making things what's right. If your end buyer stops paying, or if you're putting a tenant in there, you would always step up. And I've done it. I've cost me $47,000 in a deal before because I did in a deal in a state that I could go on and on. But what I did is I sold that in a lease option contract, and it was a state where the when you do a lease option, when you put an end buyer in there, you usually do a lease agreement, and then you do what's called a purchase and sale agreement. And they stop paying, and it was in the state where when they go ahead and evict, they automatically get legal aid. Well, the legal aid attorney ran circles around my attorney, and he knew exactly what my attorney was doing. So they went in to try to do the eviction on it, and they said, "All right, Your Honor, since we're doing the eviction, let's throw out the purchase and sale contract." And my attorney and their attorneys and the judge all ruled to throw out the purchase and sale contract, and now we're just going with the eviction process, because typically that's what you want to do as an investor. You want to go and evict so you can get them out quick as possible. Well, in this state, and this attorney knew what they're doing, and then all of a sudden it becomes landlord-friendly tenant law, because the sense of purchase and all the maintenance and repairs, guess who got stuck reversing over $25,000 of supposedly they came up with. So that's kind of one of the reasons why you really need to know the rules and regulations in the states and stuff to that nature. But
Right.
hopefully that answers some of that.
No, it does. It's just there's so many different, because I promise you this. I absolutely promise you this. The person that just watched something on YouTube for 10 minutes that goes, "Oh my God, I can do it too," has no idea that, wait, what happens in court? Like what, like, wait, they're gonna, how could they even throw out the purchase and sale agreement? And I bet, to be fair, I would bet until it had it happen, you may not have understood the full process of it either. Like, there's so much complexity. But let's do some best practices on the front end, right? So, Mark, you're my seller, okay, and I'm going to present you with sub two options. Hey, and here's what's happening today that I've seen. Okay, Mark, I know you're struggling to make your mortgage payments. I know you need to get out of the situation. We don't want you to get into that foreclosure either. We can take over those payments for you. The way we do it is something, and this is the pitch. I'm serious. I've heard it so many times. It's called subject to. Some people call it sub two. And we'll just take over your mortgage subject to your existing terms. You don't have to go out there and do anything special. It's just some paperwork that we have, and you'll sign that and we'll take it over. We'll maybe even service it with a third party person, so that the loan's being serviced not from me. And we'll just make sure that's being paid on time every month. You can move out. It's not going to get a foreclosure on your credit. You're going to be in good shape. Does that sound like a great benefit? These are good salesmen at that point. Like, wow, that's nice. Wow, well done. Thank you for saying that. Yes, right? But then the paperwork comes into play. It's loose at best. And what's the best practice here? What should people do?
You got to explain everything, the pros and cons. The pros, like you're saving the credit,
Yeah.
making their payments, they can't sell it. The con is if I stop paying or whoever stops paying, it's going to hurt your credit. You can have a foreclosure, or the lender could call the loan due, what's called a due on sales clause.
Yeah.
So you really need to, and most people have those disclosure documents in there, but they're just sliding the paperwork right in front of the seller and they're just sellers just signing.
Well, because we're afraid, right? If I send them to disclosure, it might scare them away.
You have to be upfront and honest. That's the number one thing. You have to be upfront and honest because things will come up. I guarantee you things will come up. And even if you're doing assignment / wholesaling, you will get pulled into it. I
Sure.
can't tell you how many times I've heard these people come in, my contracts are solid. I'm not going to get sued. Not at all. It's my end buyer's responsibility. I can't tell you how many times a week or a month calls that I get people that they're getting sued or they got a big legal mess and they're like, my contracts, it doesn't matter. They can sue anybody. Everybody's going to get pulled into it. The wholesaler, the back investor, everybody's going to get pulled into it. And then the other thing that's really happening, it's really blowing my mind, is they sell the pitch. Oh, if anything happens and I stop paying, we'll do what's called a performance deed or deed in lieu. You automatically get the property back, Mr. Seller. Yep. I can't tell you. I did a deal. I did a deal like 12 years ago, and I paid down on this mortgage for 7 years. And back then, they didn't have the portal where you can go in. Like nowadays, I go in and do the portal. Payments are automatically on mine on the 25th, automatically sent directly to the lender. A lot of people will wait until the money comes from the buyer and then disperse it. That's a big no-no. I can tell you, I had a call a couple months ago where somebody's getting sued for $130,000 because they didn't realize that the loan servicers, usually when your buyer makes the payment on a loan servicer, they hold it for 2 weeks.
Yeah.
Well, this guy's first payment was on the 5th and the next one was the 9th, and then he made the 18th. Well, by this time, they're 30 days late. And guess what the wholesaler did?
Late on your mortgage. Yep.
And guess what they had? They had a deed in lieu performance clause in it. The seller's like, I want that property back. And they got $50,000 from their end buyer. They called me up asking, what do I do? What do I do?
Don't do that again. That's what you do. Yeah, man. Yeah. And that's why, like, I really wanted to keep talking. It's like, it's not to scare people, right? Like, we don't want to scare anybody from doing these. Creative finance is a very powerful tool in our belt if done appropriately.
Yes. Yep. 100%. And the thing about it is people coming in are just jumping straight into a subject to without knowing what an LTV is, what a DTR, they don't even know about the consumer protection regulations. That's why if you're listening and you're coming into this, that's why they sell to other investors, because then you're exempt from this consumer protection regulations. Now, we are trying to pass a bill there's a group of us that have been, we're trying to pass a bill in Congress right now that, because right now you're only allowed to do a 3-year before you have to use a licensed RMLO, which if you're new, always use a licensed RMLO. That's a mortgage loan originator to underwrite your end buyer to make sure they can qualify. The key to it is you got to make sure they can make the payments. The credit doesn't matter so much, but you need to make sure the payments, because otherwise, believe it or not, you as the investor, whenever you're structuring a loan that has terms, anything like that, you're also viewed as a lender in the
Mm,
regulatory eyes, and people don't realize that. You are a lender and you're also originating deals. So you could be viewed as what's called a predatory lender. A
sure.
lot of people don't know that.
Yeah. And I mean, there's just so much like involved, right? There's so much involvement on it. What would you say, like, because to be fair, if you're, and you've been in this 30 years, right? I'm in it for maybe 10-ish at this point now. By all metrics, at 10 years, I'm a seasoned veteran, right? There's so many brand new people that are now investors that all have been in a couple of 2 or 3, 5 years, maybe at the most, 2 years, whatever. Um, and they're here in creative finances, like, because the market has shifted. Rates are not 2 and 3% and 4%. Now they're 7 and 8, and, you know, the best deals were like, we got to pivot with the market. You're like all the things that you're hearing, and we're going to pivot by using creative finance. And that's the way to do it. And it is, I'm not hating on it because I think it's right. But how do people get the right education? Where do they go? How do they do that? What's the best in your opinion?
My opinion is look who's teaching, how long they've been doing it for. Minimum 10 years. And then I hate to say it, how many times have they been through a legal process of a deal going bad?
Mm-hmm.
Then you know that they've been through it. I mentor people, and what happened was I got into this mastermind, and this mastermind, they said, oh, I paid a lot of money to join this thing. And they're like, oh, you're going to be surrounded by other real estate coaches, and you guys will be able to network and all this stuff. And we're going to go down to Puerto Rico. So I go jump on a plane, go down to Puerto Rico, and there's probably about 15 coaches. And I was just, I don't know my feelings were like, I was appalled. I was embarrassed. I was shocked because most of these people that were part of this program have only done 2 to 3 deals, and they're all like trying to learn about at the time they were really pitching the Airbnb model. That's kind
Yeah.
of, we saw
Yeah.
what happened there. They've only done 2 or 3, and I was just like, oh my God, you guys are still learning this stuff. I mean, how many had a deal that goes by it and they end up in some litigation with you're getting sued or anything like that, or a deal gone bad. And so great people, very nice. They had some amazing speakers, so I did really well on that. But again, make sure that whoever you're learning this from has had years experience. Um, Even the people that are processing the paperwork, they call them TC, transactional coordinators. I see them giving legal advice, and there's a lot of wrong legal advice. So, how long have they been doing it for? Make sure they've been in the business for at least 5, 10 years. Have they done 100 transactions minimum on that stuff? And then, quite frankly, reach out to some attorneys.
Yeah.
Talk to some attorneys. Let some attorneys review your contract. That one contract, that one deal that I told you about earlier. It was a state that I never done business with, and I was lazy, and I used one of my old contracts, and they had their own language and their own laws and regulations for lease options in that state, and it bit me. Quite frankly, it came back and bit me because
Yeah.
I didn't want to pay $1,000 to have an attorney review my contract, because I've been doing it. I thought I knew what I was doing, but it came back and bit me hard. So
Yeah.
always have your attorneys review those contracts in those states. I'm sorry.
Huge. And am I allowed? I'm going to do it anyway because you didn't do it. But also hook up with Mark. like, I mean, you do. You mentor. You teach people to do. Like, this is something that in you've got. You're the. I mean, you've done exactly what you just said. I've been in it for 30 years. I've been doing this. I've been through the legal complexity of it. I've done this. I've lost this. I've had, you know, if you guys are going to take advice from, like, I was just talking to somebody a minute ago, Mark, and he had some really great wisdom that I thought was really cool. When you're hiring coaches, okay, never hire a coach that, like you said, hasn't been through it, but also doesn't have somebody they're looking up to that's teaching them too.
Absolutely. You want to
right?
constantly keep growing.
Yeah. And so I'm
Great,
like,
great,
so
great advice.
yeah,
I
because
like
well,
that.
I mean, I know a lot of coaches are like, no, I'm the guy. Okay.
Hey,
Can you? Yep.
there's things that I get like, hey, I'm not from the, and I'll tell people if I don't know the answer, I'll definitely look into it and help you. Like if it's a state like I don't do business, for example, I stay out of Texas because of Texas regulations. And
Hmm.
and like the lease options. But I had people asking me questions, and I have a lot of my Rolodex is pretty big. I can reach out to people, do a little research, and kind of
Yeah.
look into it and find out. Be more than happy to help people. But the other thing, I don't want to talk about price, but my mentorship programs are a fraction of the cost of everybody else's, nowhere
Yeah.
near, because I'm a big believer just paying it forward, and that's kind of. I know everybody's like, why are you charging so little? But anyways, sorry to say that. Go
No,
ahead.
don't be sorry at all. I mean, that's our convictions, right? Like of like, I know given it shall be given unto me, right? That's a principle, you know. And
Well,
I applaud you for it. Good on you.
yeah, well, what I get out of it, yes, I charge a little fee just to kind of my time is worth something.
Yeah. Yeah.
Um, but I really, really enjoy watching somebody doing their first deal. It's kind of like when I sell a property to a family on a seller financing strategy where they typically can't, they don't think they can own a property. They don't think they can get home ownership. And when you see how they react and they become a true homeowner and they refinance a property, get in their name, it's such an amazing feeling. And it's the same feeling as helping somebody do the first deal, helping somebody to be able to succeed. I guess the best way of describing it is you think of your child when they at Christmas time and they open that gift up and they're getting something
Yeah.
and you see that, that feeling that you feel good. That's I get more of a high than anything
Yeah.
at this moment.
Yeah. I mean, and when that happens, like I mean, it's the law of reciprocity too, right? So like you're able to, you're bringing this value and you're bringing this value and you're bringing this value, and the natural byproduct is for Mark. I don't know. I am making assumptions here, but I imagine it comes back. It comes back. It comes back. You know, I love that. I mean, I think that's beautiful. I want to ask you this though. People, I just kind of plugged you a little bit, but like, how can they get a hold of you? Like, what's the best way for that to happen? How can they reach out? You know, what does that look like?
Well, you can just type my name, Mark Monroe, and then real estate. You'll see all the stuff that pops up. But my website is Mark, like my name, MARK, the minus sign, Monroe.com. But you can follow me. I have a huge group on Facebook. I think we just hit 160,000 members over there. Just in general, we're always giving information, helping people out.
Yeah.
But just type my name in, Mark Monroe, in real estate, and you'll see all my stuff that pops up. I have a book over there that was #1 on Amazon as well. Actually, I have a copy of it here. um, and you can
Oh,
get that on
perfect. Yeah.
Amazon as well. But you can probably follow it through the website as well.
Yeah. I mean, and guys, it when we say there's no brainers, sometimes there's no brainers, right? This is a no brainer because if you're going to be doing it and pivoting with the market, you need to do it the right way to save yourself from. I'm telling you, like, don't get. We talked about this pre-show, Mark. Humility, right? Don't let your pride get in the way enough to say it can't happen to you because if it could be out of just unintentional ignorance. Yep,
Happens
it
to
could
all
be
of
out of
us.
yeah unintentional ignorance. You didn't know that rule in that state that you didn't know, right? Unintentional ignorance cost you $47,000. Unintentional ignorance, guys. That's why you have people in your corner, coaches that have been there, done it, have the, they have the scars, they have the, the things like that. So it's a no brainer. Reach out to Mark, get to know him. At a bare minimum, guys, it's a free Facebook group. Okay, just go on. You know what I mean? So, yeah,
It's not just that, it's about networking. I mean, we're always we met at another mastermind.
yeah,
So we're even always surrounding ourselves with like-minded individuals that kind of raise our level, even
that's
at
right.
this stage. So it's not a lot of people don't want to pay because they think they can take shortcuts and do this, but it will save you so much time and money and headaches. I can't tell you how many times I see people come in, they listen. I do free Zooms on Monday nights, also on seller financing strategies. They come in, they try to pick my brain and learn stuff to go out there and do something, and it costs them because they didn't have the right guidance through the whole entire process on it,
Yeah,
the whole pro on that. But the other thing is also is there's so many creative seller financing strategies. You have to
yeah,
understand the seller's needs, and this is where most people really get where people really go wrong, and even other investors, they're always looking at the numbers. Yes, you need to look at the numbers, but when it comes to creative seller financing strategies, you have to think of it like this. It's a marriage. You're going to be in a long-term commitment with these sellers for 3, 5, 7, 10 years. So the first time you're having that conversation with a seller, think of it like your spouse. You're sitting down, talking, and getting to know each other. 80% of my phone call with them is getting to build a rapport and a relationship with them.
Mm-hmm.
I could give you a quick example on a deal. One of my members had a program. We jumped on a phone call. This guy had, he was open to seller financing. He only wanted $128,000, but he wanted $30,000 down. It did not make sense. He had I asked him how many offers he had. He had 12 or 15 offers from other real estate investors. And I said, what's the problem? They're all beating him up in a low price. So I spent a good half hour just getting to know him. I got to know his kids, his dogs, his sports, and he's getting to know me in return. We
Sure.
just built that rapport.
Yeah.
I found he banked with a credit union, good credit, all that stuff. And I found out what he needed the money for. He goes, oh, I need $25,000 for a camper, and then he needs some spending money. So I took him on that journey of asking what his life's, we're visualizing camping, what he's going to be doing, blah, blah, blah. So I took him down that road, made him feel it. So I came back to him and I said, no, I'm going to be frank with you. Nobody's going to put $30,000 down on a $120,000 home. So what I'll do is I'll give you $3,500 down. Go ahead and take a loan out from the camper at the credit union he banks with. He has a really good rate, and we'll make the payments. So on the 20th of every month, we automatically make the payments on the camper on his behalf. We got that deal for $3,500 because I listened to him. He built a rapport, and I understood what his problem was.
Yeah, that's why, I mean, there's power in creative finance, right? There's so much power in it, but guys, you have to do it responsibly. But when you do figure it out and you can do it responsibly, I mean, I imagine, Mark, I don't want to make any assumptions. Residential, I'm sure there's commercial plays. I'm sure there's all kind, like it's exponential. Am I right?
Well, about 5 years ago, there was a land development deal in Carolinas. The seller wanted $1.5 million for this piece of land. Don't remember how many acres, but it was on public water and sewer. Instead of him getting $1.5 million, he ended up making 3.1 on it. And what I did is I brought a builder developer in, and we used the land as the leverage. We ended up building 49 homes in there. We used the land as the leverage for the entitlement, and we would build 5 homes at a time. We got into that deal with no money down.
And
it was a partnership.
Yeah, that's the thing, man. So, yeah. So guys, again, you've heard it here. Like, go follow Mark. He's got the free Facebook page, Mark Monroe, however you say, mark-monroe.com. Follow him, guys. He's worth following, and really like dive deep, because if you're going to be doing it, do it the right way. And, be like Mark, guys, like do it the right, hopefully without some of the lessons you've had to learn, right? And learn from us. So, all right, Mark, it's been a phenomenal show, man. Seriously, thanks for jumping on here with us today. Your wisdom is so good. Thank you for sharing. I appreciate you.
Well, I appreciate you having me on, and it's always a pleasure. I always enjoy chatting with you. It's always, it's high level. I really enjoy that. That's the key to it, is like, you need that high level, and it makes it more fun,
Yeah. It's iron sharpening iron, right? Like we're helping each other, grow. So yeah, same to you, man. You're the best. I appreciate you. And guys, until the next show, we'll see you on the next one, everybody. Take care, guys.
Be well, people.
All right, bye.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.